RTP and your R2E material. Okay. Yes. So contract costing. Let's start with contract costing. Contract costing is used for what? Yes. Your construction related activities. Yes or no?
Yes,
Maybe
sir.
construction of, could be construction of anything, correct? Construction of your buildings, construction of roads, dams, ships, etc. Yes, whenever there is a large contract of a longer duration. Yes, you're muted. Yes, large contract with a larger duration. That is when contract costing comes into place. So specific order costing only, there are two coins. One is job costing and then the other one is contract costing. Job costing is for a shorter period and a smaller size in nature, whereas contract costing is normally for a larger contract and for a longer period in nature. The cost involved is normally higher. Yes or no? For contract costing, all of you remember?
Yes, sir.
Contract costing is from the perspective of contractor or contractee.
Contractor.
We only refer to the books of the contractor and not the books of the contractee. I hope you all can recall this. Yes, so this is my basics of contract costing, and then we learn the different types of contract costing, that is fixed price contract and cost plus contract. Fixed price contract, the contract price is agreed in advance, yes or no, before the contract starts, whereas cost plus contract only, the cost is not agreed in advance, whereas only a percentage of what will be added to the cost is agreed, correct? Therefore, in cost plus contract, there is no possibility of loss, because whatever cost you incur plus a certain percentage profit is paid in cost plus contracts, whereas in fixed price contract, there is a possibility of a loss, yes or no? Yes, what is the possibility of a loss? Because the anticipated cost, whatever estimated cost you have, if the actual cost is more than that, yes, there is a possibility of a loss in case of a fixed price contract. To cover for your rate increases, yes, to cover for your rate increases due to macroeconomic factors which are not within the control of the management, yes, which are not within the control of the contractor, there is a clause called as escalation clause or de-escalation clause in fixed price contract. Remember this? Yes. Yes, that is my. So there is no concept of escalation or de-escalation clause in cost plus contract, because obviously the cost is, however, covered in cost plus contract. The contractee will have access to the books of the contractor because it is cost. So you have to know how do I arrive at the cost. Yes or no, guys? Correct. Whereas in fixed price contract, they do not have access to the books of account. Yes. So this is the basics of fixed price contract and cost plus contract. And then we learned some important terminologies. Yes. So first of all, what is work completed? Correct. What is work completed? Whatever work is completed as on the reporting date, I call it as work completed. Clear? Remember my building of 4 floors. 4 floors building a lift. 3 floors is completed. I call it as three floors is completed work. In terms of value, whatever the value arrive at, that is a work completed. However, work certified is a portion of the work completed which has been certified by an expert. Correct. So if the engineer or whoever the expert is has certified 2 floors out of the 3 floors, my work certified will be 2 floors. The balance 1 floor which is not certified, I call it as uncertified. Correct? Yes.
Yes,
sir. Certified work, certified and uncertified. Your work certified, whatever certified, it is recorded at the selling price. Yes or no? It's like my sales. Whatever it is not certified, it is like a closing stock and it is valued at cost. Both of this you write it as by WIP only. Yes, in your contract account, both of this you write it as by WIP. Work in progress, it's a stock which will be carried forward to the next year. Yes or no? Yes. Remember your contract account, if you prepare, contract account is like a P&L account, wherein your WIP is like a stock, wherein first year you record WIP, work certified, work uncertified. Work uncertified is at cost. Work certified will be at sales value. And the same thing you will carry forward to the next year. Remember? Yes, and at the end, the balance will be transferred to your contractee account, contractee account, only in the end. So when you're presenting in your balance sheet, first you'll have contract account, less your contractee account, correct? Whatever the money you have received. Are you guys able to visualize it? Yes?
Yes, sir.
Yes, then you have something called as the retention money, which is a portion of the work certified that is retained by the contractor because of certain anticipated repairs cost, etc. Yes, contractee, which is retained by the contractee because of some anticipated repair expense, etc. Clear? That is what this is my retention money. Yes, all right. So open your R2E material. Let us go through the theory that is given there.
24.
Yes, page number 24. Yes, one of read. Yes.
Contract costing. Contract costing is applicable for all construction related activity, building, roads, flyover, dams, construction of machines, ships, etc. Contract costing is mainly applicable for contractor and not for contractee. Types of contract. Fixed price contract may include escalation or de-escalation clause, cost plus contract. As per AS7, only percentage completion method of revenue recognition shall be followed only for accounts and not in costing. Contract account expenses are debited and contract price is credited to the extent of completion. Contract account, debit and credit particulars to all the costs related to contract, to depreciation. There is no corresponding credit for it. To plant issued for depreciation, corresponding credit is there, and to P&L account, profit to be taken to P&L account, percentage of completion method AS7. On the credit side, by contract price, under that A, work certified at selling price, B, work uncertified at cost. The aggregate of above is reduced by advance money received and WIP reserve in the balance sheet. For depreciation, there is no corresponding credit, and for plant, it is recorded at WDV. Certain terms used in contract costing. Work completed, it is that part of contract which is completed as on the date of the financial year end. Work certified is that portion of the work completed which is certified by valuer, engineer or architect. Work uncertified, it is that portion of the work completed which is not certified by the valuer, either for defective work or for not meeting the prescribed standard. Retention money, it is that portion of work certified which is retained by the contractee, keeping in view for certain repair work, etc. to be carried out in the future by contractor.
Okay. All right. Now open your revision test paper, RTP. So again, here both as one. Okay. Yes. So 7, job costing. This one of you read.
SM Motors Limited is a manufacturer of auto components. Following are the details of the expenses for the year 2022-23. Opening stock of material, closing stock of material, purchase of material, direct labor, factory overhead, administrative overhead. During the financial year 23-24, the company has received an order from a car manufacturer where it estimates the cost of material and labor will be 80 lakh and 40 lakh 50,000 respectively. The company charges factory overhead as a percentage of direct labor and administrative overheads as a percentage of factory cost based on the previous year's cost. Cost of delivery of the components at customers' premises is estimated at rupees 4,50,000. You are required to calculate the overhead recovery rates based on actual costs for 22-23. Prepare a job cost sheet for the order received and the price to be quoted if the desired profit is 25% on sales.
Yes, simple. So here what? Oh, first you have to calculate the recovery rate, correct? Because what are they given here? Factory overhead as a percentage of direct labor. So previous year data is given so that you can find out the overhead recovery rate. Are you guys understanding? So 30 lakh 80,000 divided by 90 lakh 50,000. Clear? That you will get the percentage of direct factory overhead as a percentage of direct labor. That's what they've given here. And administrative overheads. So administrative overheads is 20 lakh 50,400, and that 20 lakh 50,000 as a percentage of the factory cost. So the entire thing. So you have to find out factory cost. Yes, what is the cost sheet basis? Cost sheet. What is factory cost? Your prime cost plus
Factory
overheads and any movement of the inventory. Yes or no? Any movement of the inventory that also has to be factored in, and then you get your factory cost. Yes. So now let us look at the answer. Yes. Yes. Calculation of overhead recovery rate. If you can see the screen. Yes. Factory overhead recovery rate. Remember, yes, what I discussed. 30,80,000 divided by 90,50,000, 34% of direct labor. Factory cost you have to compute. Yes. Opening stock plus purchases less closing stock, material consumed, direct labor, prime cost at factory overhead, you get factory cost. Okay. Other percentage, 20,50,400 divided by 2.96 crores, you get 6.9591% of the factory cost. Okay. Yes. So now in the question, now you have to use that to find out what is the for 22, 23, 24. Okay. 23, 24, the data is given is the company has received. You're able to see the question or only the answer?
Only the answers.
Only the answer.
Yes, now?
No, sir. Yes, sir.
Question, sir.
Now you can see the question, no? Yes. So, it's 23, 24. The company has received an order from a car manufacturer where it estimates the cost of material and labor. So direct material and direct labor is given here. Okay. The company charges factory as a percent. So now labor is given. So as a percentage of this, so this 40,50,000 mainly you'll calculate you'll apply the overhead recovery rate of 34%. Yes or no? Guys?
Yes.
Okay.
Yes, sir.
Yes, sir.
So now look at this. Okay. So for 23, 24, you can see this answer.
Yes, sir.
Yes. So 80 lakh, 40 lakh 50,000 material and labor given in the question. Factory overhead is 34% of the labor, 13 lakh 77. Factory cost is 1.34 crores. 6.91% of that is administrative overhead. You add that. Additional cost C given in the question here. Cost of delivery is 4 lakh 50,000. That 4 lakh 50,000 we add here to get total cost. And to that we'll add the profit percentage of 25% on sales. Very important. It is on sales. So on cost it is 1/3 on cost.
33.3%.
Correct, 1/3 on cost. So that you compute this and then sale value, the price to be called for the order. Simple. Yes. Yes.
Yes,
Now
sir.
I wouldn't have discussed this question, but since it is in your present RTP, I thought let me just go through it. Okay. Now come to the problem section of your R2E material. Yes, R2E. Yes, page number
268.
268. Yes, job and contract costing. Yes, come there. Yes. Okay, this is again related to your job cost. Okay. It's pretty simple. Yeah, only one thing, just note down, Madi. When you're solving, you'll get to know, right? What you have to do is they've given you for the I just quickly just glance to the question. See, a jobbing factory has undertaken to supply 200 pieces of a component per month for the ensuing 6 months. Every month, a batch order is opened against which materials and labors are booked at actual. Overheads are levied at a rate per labor hour. The selling price contracted is rupees 80 per piece. From the data, calculate cost and profit per piece of each batch and overall position of the order for 1,200 pieces. Okay, so they've given you this data. Based on this data, you need to compute what is the profit. So data is given. See, you can check this here. 210, 200, 220, 180, 200, 220. That is the output. Yes, monthly output. Clear? Very important is you have to do the total here. Okay, you have to do the total. You have to find out for overall position. Andre, you'll get to know now. See, sales value is given, material cost given, direct wages, chargeable expenses, you compute. Chargeable expenses 1,20,000 divided by 4,800 into your direct labor of 240 hours. Okay. Based on direct labor hours you're doing. Other details, 1,20,000 is the chargeable expense. Direct labor hours corresponding to it is 4,800. For the particular month, for this batch, 240 labor hours is used. So you'll multiply 240. That is how you get 6,000 here.
6,000.
Yes, sir.
Yes, that's how you get 6,000 here. Same way. So total cost, then profit per batch is found out. Total cost per piece divided by 210. Okay. And then profit per piece. Clear? Yes. What is important is you need to find out the totals here. Why? Because for 1,200, you will use the total information. For 1,200, you will use the total information. Now check here. Sales value of 1,200 is 80 per piece they've given. Cost you have to take 73.4. Therefore, you need to do this. Otherwise, what is the cost you will take? You cannot take for which batch will you take. Average cost you need to take for 73.4, what you've got for entire 1,200, that is what you will take. Okay, that's all. That is the only thing you need to note down there. All of you understood?
Yes, sir.
Yes, sir.
Yes. So this is another contract costing related problem. Okay, check here. XYZ LLP contractors and civil engineers are building a new wing to a school. The quoted fixed price of the contract is rupees 30 lakh. Work commenced on 1st Jan 2022 or 20 whatever 2 and is expected to be completed by 30th June 23. Okay. So January 22 to 30th June 23 means how many months? 12 plus
3.
ಅರ್ಥ ಆಗ್ತಾ ಇದೆಯಾ? ಎಸ್ ಜಾನ್ವರಿ ಟು ಡಿಸೆಂಬರ್, ಜಾನ್ವರಿ 2022 to December 2022 is 12 months. Then 6 months of your June 2023. Did you understand? That is the entire contract period. However, data relating to the contract at the end of 31st March 23 is as follows. So this is for how many months? This is for how many months? First one is for 18 months. Second one is for 15 months. Did you understand? Yes, as at 31st March 23, Andre, this is for 15 months. The above is for 18 months. That entire contract period. Okay. Plant issued and all the details are given. Okay. Next. Additional information, plant is to be depreciated at 25% using SLM method. Unused materials are estimated at 50,000. Wages owed to direct laborers. The accrued wages you have to add. Budgeted profit on the contract is rupees 8 lakh. 8 lakh is the total profit. Yes, estimated profit, total profit. Value of work certified by the surveyor is rupees 24 lakh. The surveyor has not certified the work costing rupees 1,80,000. So value of work uncertified at cost is given. Artha agta idya?
Yes, sir.
Yes. You are required to prepare the contract account for the school for the 15 months. So e question and directly they have given. Okay, 15 months ended 31st March 23 and calculate the notional profit to date. Yes, you all know the difference between notional profit and estimated profit.
Yes, sir.
Estimated profit is for the total contract. Yes or no? Whereas
Yes.
notional profit is only until the date of reporting, whatever is the profit. That is the notional profit. Now, so contract account. Yes. So if you see 24 lakh and 1,80,000, clear? Work certified, work uncertified. Next, whatever material returned, plant carried down, materials, all this is given in the question. Ade bandiro. Okay, na. Then to plant account to hire, then to materials. Here, accrued you should add. Yes, 40,000. Adjustment was there. Okay. Wages related cost, direct expense, all of this directly given in the question. Okay. Just add madi. I mean, just prepare the contract account and then you'll get the notional profit. Clear? Just format again. Format. This is the format. I hope you remember. Yes. So now XYZ Construction Limited has obtained a contract of 25 lakh. In the financial year 21-22, the work on the contract commenced immediately and it is expected that the contract will be completed by 31st March 23. Chief accountant of the company has provided the following information. So 21-22 actual, 22-23 estimated is given. Okay. Material issued, wages paid, prepaid at the end. Enadru nenapagtide idu prepaid, then outstanding. Similar kind of problem was your practical question. Lastly, I discussed and given as a homework.
Yes, sir.
That similar problem this is. Similar problem this is. See, this is your question paper actually. So similar problem what is there in your practical question. A part of the plant costing rupees 12,000 was scrapped. So a lot of adjustments are given here. Okay. Company. So similar. All this we have done in the class. Okay. Company would have to spend an additional sum of 80,000 on the plant in financial year 22-23. Residual value of the plant on the completion of the contract would be 10,000. So again, you need to find out for 22-23, you need to find out what the depreciation is. Part of the material costing 30,000 was scrapped and sold for 20,000 in FY 21-22. Value of the material at site is given. Cash received 13,50,000 representing 90% of the work certified. And what is work certified? 13,50,000 divided by 90%. Yes or no?
Yes, sir.
Correct. The cost of the work uncertified was valued at 20% of the work certified. Yes. So again, find out what is the cost of the work uncertified. Clear?
Yes, sir.
Prepare contract account, calculate the estimated total profit on this contract. Okay. So costing P&L account, to material issued 4 lakh, all the adjustments, so wages plus prepaid, then plant, sundry expenses outstanding, all directly lifted from the question in the copy paste, all the expenses. Okay. Yes. Material sold 20,000 NPDA early. 20,000 was there.
Yes, sir.
Yes,
sir.
here. Check here. 20,000. Material costing 20,000 was sold. So same way, all the adjustments are put here. What is the closing value of the material costing P&L account? What is this costing P&L? The profit on the 20,000 that is sold. Yes or no? Sorry, this
Scrap.
yeah, scrap irಬೇಕು, correct. Okay. Next, by work in progress carried down 15 lakh, then 3 lakh and 18 lakh. Okay, simple. Okay. Then estimated profit you do for the remaining period. Clear? Yes. Same problem. Adhe practical question it has come. I cannot do the entire problem. It's a lengthy problem. Okay, it will take some time. But I'm just glancing through it so that it refreshes your memory. Okay, now when you'll be able to do it faster. The objective is when you do on your own, it should be a little faster than if you're not attended the R2C session. Okay. Is again, this is okay. Okay, just the adjustment, working notes we'll just see. Okay. A contractor prepares his accounts for the year ending 31st March each year. He commences the contract on 1st July. The following information relates to the contract as on 31st March 22. Material issued, wages, salary to foreman. A machine costing 13 lakh has been on the site for 4.8 months. Its working life is estimated at 7 years and its final scrap value is 75,000. Okay. So on the site it is there for 4.8 months. Working life is 7 years. Scrap value is 75,000. So annual depreciation you can easily find out. 13 lakh minus 75,000 divided by 7. Yes or no? However, for the entire period, it is not in the contract. It's only for 4.8 months. So the depreciation to divide by 12 into 4.8. Okay?
Yes, sir.
Yes. So can you guys see? Yes.
Yes, sir.
Yes. See, same thing they've done. 13 lakh minus 75 divided by 7 divided by 12 into 4.8 is 70,000. Yes.
Yes, sir.
Is
Yes, sir.
70,000. Yes. Next. Supervisor who is paid 40,000 per month has devoted 1/2 of his time to this contract. So only half of the cost will come. All the other expenses administration charges amount to 6 lakh 500. Material in hand at site costs 1,77,000. Closing inventory. So on the credit side, the contract price is 1 crore. On 31st March 22, 2/3 of the contract was completed. Only 2/3 was completed. The architect issued certificate covering 50% of the contract price. That means work certified is 50%. Did you all understand? Work certified is 50%. The contractor had been paid 37.5 lakh on account. So 50% of the is work certified. That means what is work uncertified? So 66.67, 2/3 is complete.
Yes, sir.
See, guys. 2/3 is 66.67% is complete. Okay. 50% has been certified. That means balance portion is work uncertified. Yes. 16.67. Or in other words, 2/3, half, and then 1/3. Artha. Yes. Okay. Now see this. Now see this. Okay. Let us just see the working note. You'll understand now. Yes, the cost of 2/3 of the contract is 52 lakh 45,000. I think that is when you complete it, you get to know work cost. Okay, clear? When you complete the question, this part of the question, you get to know what the works cost is. So that is 52 lakh 50,000. So divided by 3, and the total is 72 lakh 67,500. Artha for 100% of the contract. Yes. 50% of the contract has been certified by the architect. So that means 50% of this is 39 lakh 33,750. Correct?
Yes, sir.
Yes, sir.
Therefore, for the balance portion, that is the cost of 1/3 of the contract which has been completed but not certified by the architect is how much? 13 lakh 11,250. Did you all understand this?
Yes, sir.
Yes, sir.
Yes, sir.
Yes, that's all. That's all. That adjustment you need to know. Anyone want me to explain this again? Yes. Clear? All of you clear?
Yes,
Yes,
sir.
sir.
Yes, sir.
Yes. We'll go to the next one now. Yes, in order, I don't have to discuss it in detail, but let's just, what's the concept? When quantity in tons is given, rate per ton of standard is given, actual quantity in tons is given, and rate per ton of actual is given. For escalation clause, what will you consider? What variance? Only the price variance multiplied with what? The actual quantity or standard quantity?
Standard quantity.
Yes. So let's see the answer here. Yes or no? Now, statement showing the additional KIM. Standard quantity in hours standard rate minus actual rate, variation in rate, adukku multiplied into standard quantity is the escalation claim for material and for wages separately. Clear?
Yes,
Yes.
sir.
Able to recall? Yes, because fixed price contract only escalation claim, you will consider only those rate increases which are not within the control of the management. Quantity increase, I told you guys, is normally within control. Yes or no? Because it shows the efficiency of the usage of the quantity, whereas rate is normally not within your control. Therefore, only rate variance is considered. Clear, all of you? Says so to the agreed price of 2.5 crores, you're adding the escalation claim of 14 lakh 5, and the final price payable will be 2.64. Yes, this is theory. You have to read it. Okay. Define cost plus contract and state its advantages. Yes, is ascertained by adding a percentage of profit to the total cost of the work. Yes. Such type of contracts are entered into when it is not possible to estimate the contract cost. Yes, with reasonable accuracy. All of it is discussed due to unstable condition of material, labor, services, etc. Following are the advantages of cost plus contract. The contractor is assured of a fixed percentage of contract. There's no possibility of loss, correct? No possibility of loss. There is no risk of incurring any loss. It is useful, especially when the work to be done is not defined, does not have a definitely fixed at the time of working the estimate. Contractee can ensure himself about the cost of the contract as he is empowered to examine the books of account. Yes, so he can examine books of account, whereas in fixed price contract, can the contractee access the books of account? No. Yes.
Yes, sir.
All right. Next, Brick Construction Limited commenced a contract on 1st April 2020. The contract was for 10 lakh. The following information relates to contract as on 31st March 21. Value of work completed is given. Yes, work uncertified is given. Next, expenditure, material, special plant. Okay, again, very simple. Okay, 5-mark problem idu mostly. Yes. So value of work certified. Remember, whatever is the here, the retention money is they've given you. Yes or no? Adanna divide madre, you will get the total work certified. Okay, cash received, value of work certified minus retention money, notional profit is simple. Okay, very simple equation based problem. Okay, again, this is job costing related. Difference between job costing and batch costing. I told you none of the theory which is there in R2E you can miss. Okay, all the theory questions you should know. Yes. Again, same thing. This is that practical question related. Okay, practical question related. The first one, what we discussed, no, similar problem. This is okay. Estimated profit, calculating the estimated profit and everything. Remember this. In the event of increase in the price of materials and rates of wages by more than 5%. Remember the price line I had on. Yes, 0 in the 100. So by more than 5%. So how it is? 0, you'll go to 100. By more than 5 means more than 105. Yes, more than 105. So the question reads, in the event of increase in the price, yes, in the event of increase in the prices of materials and rates of wages by more than 5%, the contract price should be increased accordingly by 25% of the rise of the cost of materials and wages beyond 5% in each case. It was found that it was increased by 25%, which means what? Yes, so now it is 100. They are saying it has become 125. It is 100. It has become 125. The increase beyond 5% is 20.
Yes,
the
sir.
increase beyond 5% is 20. They're saying 25% of this 20. 25% of this 20. Clear, all of you? Yes. Yes. All right. So 25% of this 20 only will be taken. That is 5. Okay, now. So Adanna, same thing they have done here. Check here. Material purchase. Okay, they found out what is the difference. So now, yeah, can you see this? 1,25,000. Yes, 1,25,000 is 120. 1,25,000 is after 25% increase. 1,25,000 is the current cost after 25% increase. So 1,25,000 divided by 125 into 100 is the actual original price. 1 lakh. Clear?
Yes, sir.
Yes, so calculation of the work certified. The value of the contract would be increased by 25% of the price increase beyond 25%. The price increase beyond 5% is equals to 25,000 minus 5% of that is 20,000. In my way, very simple. How 1,25,000 divided by 125 into 20 price line. 1,25,000 divided by 125 into 20. Nenpagta idya?
Yes, sir.
Yes, so that is nothing but the 20,000. So you will get either the 25%, that is 5,000. I told you 5 rupees there. Here it is 5,000. Clear? That's it. Okay, that much you should know. Aste standard and actual, again the same question. Yeah, this problem you guys solve it. Okay, this problem also you solve. Dream House Limited is engaged in the building of 2 residential housing projects in the city. Particulars related to 2 housing projects are as below. Okay, they've given work in progress, materials, land purchase near the set to open an office, brokerage, then wages paid, wages outstanding, donation paid to local clubs, plant hire charges, all of this. So a little bit different is there, but you'll be able to do it because neatly this is there. This is important. Okay, this part, this entire part is important. This part, you guys see, okay. Mark ಮಾಡ್ಬಿಡಿ ಅಷ್ಟೇ. So that I don't want you to miss all this ಅಷ್ಟೇ. Okay. Yeah, almost all this is again repeated. We have done all. We've covered it in today's class. That's it. So that is your contract costing. Okay. So like I said, in a study material also there are not very many different types of problems. Alva swalpane irodu. Make sure you solve all your study material problems, caps material, whatever I've done in the class, and your entire R2E. Aste 100 on 100 pakka barutte. Don't worry. Okay na? But ella ಮಾಡಬೇಕು. Last one, that is your joint products and byproducts. Yes, joint products and byproducts. Okay, quickly open caps material and
27.
Yes, page number 27. So yes, 2 or more products. Yeah, I'll read. 2 or more products of equal importance. Correct. Joint products are 2 or more products of equal importance produced simultaneously from the same process. All are important. Not a single word you can miss. Yes, equal importance produced simultaneously from the same process. Yes, example. Best example is your crude petrol, crude diesel, and crude kerosene. Yes or no? This is my joint product. Next, co-products means what? It is different products. Yes, that is produced simultaneously lead to co-products. Example, Jeep and car. So, alli on bariri alli need not be from same process. Co-product difference, it need not be from the same process. Are you guys understanding?
Yes, sir.
It only produce simultaneously, but it need not be from the same process. That is co-products. Whereas byproduct, obviously it is from the same process, but the main intention is not. It is produced incidentally. Nenpidya, product intended to be manufactured is called main product, and the product incidentally arising is called as the byproduct. Example, molasses and bagasse in sugar manufacture. Okay. Methods of apportionment of joint cost. First one, physical unit method. Yes, what is the assumption under physical unit method? That all are capable of being measured in the same units. Yes, either liters, kgs, yes, kilo, whatever. Yes, all the units. Everybody, all the products should be capable of being measured in the same units. Only then I can use physical unit method. Remember? Yes, that is my physical unit method. So I divide it by the total units and multiply it into the respective units. So joint cost, total joint cost divided by total units into the respective product units. That is physical unit method. Next, average unit cost method. Yes, average unit cost method. So I find out what is the average cost. How would I find out average cost? Total joint cost divided by the total units. Yes or no? Total joint cost divided by the total units. Multiply the number of units of each and every product respectively. Remember? Yes, that is my average unit cost method. Then survey method, some point value method based on research and analysis will be given. You apply those point values and you get, that is a survey method. Contribution margin method is important, wherein variable cost will be based on what? Variable cost will be based on a basis something like the physical output, etc., because it varies per unit. Whereas your fixed cost is based on contribution. Your fixed cost is apportioned based on contribution. That is your contribution margin method. Okay. Next one is market value method. Yes, for that you again have three different kinds. First one is your market value at split off, and this is the most commonly used market value method. Okay, market value at split off means what? At the split off point, whatever is the sales value of the joint products at the split off point, that is what is used for apportioning the joint cost in the ratio of the sales value at split off. Remember, it is the sales value and not the selling price. You have to multiply the value into the quantity. You have to multiply value into quantity. You cannot take the selling price or only the units as such. But the sales value is considered. Market value after further processing is the sales value after further processing. Yes. So whenever, yes, the further processing cost is not evenly incurred, it is better to go with market value at split off. Yes or no? If it is evenly incurred, right, it is not disproportionate, then you can use market value after further processing. Also, net realizable value method is the working back method. Remember, yes, it is a working back method wherein selling price or sale value is taken minus your profit margin minus further processing cost. Yes or no? Minus selling expenses, if any. All of this when you minus, and then what you arrive at is called as the share of joint cost. Share of joint cost. This is what you do it for each and every product. Clear, all of you? These are the different methods for computation of your joint cost, share of joint cost. Okay, the same thing is written here, all of this. Yes, treatment of byproduct is important. Yes, byproduct of substantial value means what? You treat it on par with your joint products. Yes, you treat it on par with joint product, and whatever method you're applying for joint product, same thing you'll apply for byproduct also. If you're applying NRV, apply NRV. If you're going with physical output, you'll go with physical output. Clear? However, when it is of small value, which is not of substantial value, then what will you do? You'll either credit it to costing P&L account, okay, and no credit is given to cost accounts, or sale proceeds of the byproduct to be deducted from the total cost. This is what we normally follow. Where sale proceeds of the byproduct to be deducted from the total cost. Remember, there was one toxic waste problem, which was a combination of your process costing and joint products. Early in your process account, we had credited the byproduct sale value. The problem important, lengthy problem again important, that is there even in your R2E material, but you can refer your own notes, beautiful notes you have done. Yes or no? Adine notkondu maadi that problem. Go through it. Okay, go through that problem. Don't skip it. All right. Yes, so that is my theory of joint products. Now open your revision test paper, RTP. Yes. Yes, read, one of you read. Quick.
A factory producing article A also produces a byproduct B, which is further processed into a finished product. The joint cost of manufacture is given below. Material, labor and overhead. Subsequent costs in rupees are given. Material, labor and overhead for A and B. Selling prices are A 16,000 and B 8,000. Estimated profit on selling prices is 25% for A and 20% for B. Assume that the selling and distribution expenses are in proportion of sales price. So how you would apportion joint cost of manufacture and prepare a statement showing cost of production of A and B.
Yes. Anybody able to recall? Have I done this problem in the class? Yes. Not able to recall? First question. Your first question was this. What I did for joint cost, no? Joint products. This is the one. Here, assume that selling distribution expenses are in proportion of sales price.
Yes, sir.
Yes. That means what? I need to find out the missing figure of selling and distribution expense.
Yes, sir. Yes, sir.
Yes. 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 See this answer now. Easy question. Okay. So first we'll go to the working note. This is what we did first. right? Calculation of selling and distribution expenses, wherein we did a working back. Total sales value given, yes or no? Total sales, where is it given? Selling price is 16,000 and 8,000. Okay, 16,000 and 8, 24,000. Are you able to see both the screens? Question and answer.
Yes, sir.
Yes, sir.
Next. Estimated profit they've given here, yes, 25% for A. So 25% of 16,000 here, 4,000, and 20% of B, 20% of 8,000, 1,600, total 5,600. Therefore, cost of sales is 18,400 less cost of production. Otherly joint cost they've given here, 10,000. Can you see 10,000 joint cost? Correct. So that is minus here 10,000. Okay, less subsequent cost. Subsequent cost is 5,000 and 3,000. Yes, further processing cost. Further processing cost your minus. Therefore, the balancing figure is your selling and distribution expenses. Clear, all of you? Because after minusing the profit, after minusing your joint cost, after minusing further processing cost, it should have actually become zero. It is not becoming zero because of the presence of selling and distribution expense. So now that you've found selling and distribution expense, you will be able to find out the share of joint cost using which method? Using which method, guys? Yes, which method are we using? Working back method is my NRV method. Yes, NRV method. So selling price is 16,000, 8,000 respectively. Profit percentage 4,000 and 1,600. Cost of sales is given here. Now, this is important. 400 is the total selling and distribution expense. It is apportioned in the ratio of your selling price. Yes, in the proportion of the sales price. Can you see the question here?
Yes, sir.
Yes. So in the ratio of 16 into 8, in the ratio of 16 is to 8, clear? Yes. So that is why into 2/3 and into 1/3, 267, 133. When you minus and then minus further processing cost, what you're left with is share of joint cost. Clear, all of you?
Yes,
Only
sir.
this is where the classroom problem ended. This is where at this point the classroom problem ended. Your RTP goes one step ahead because you have a split, right? So they're finding out the split of material, labor, and overheads. They're finding out the split of the 6733 and rupees 3267 for material, labor, and overheads. Okay, so share of joint cost. So what they're doing is material. Can you check here? Material cost is 5,000. Can't say yeah. Yes, 5,000. This is apportioned in the ratio of 6733 and 3267. Okay, this is apportioned in the ratio of 6733 and 3267. You add both, how much do you get? Very simple. If you add both, common sense, it should add up to what? 10,000.
Yes, sir.
Yes or no? So add it. If you want, you can write here. Yes, you can write here. 6733 plus 3267 is equals to 10,000. Total joint cost. Yes. So 5, then how did I get this 3367? It is 5,000 here, 5,000 divided by 10,000 into 6733.
Yes, sir.
Yes, sir.
It is 3367. 5,000 minus 3367 is 1,633. Same way you do for material, labor, and overheads. Yes, you can write down the working for this 3367. 5,000 divided by 10,000 into 6733. 5,000 divided by 10,000 into 6733. You should get this. Yes, confirm someone. Confirm. You should get 3367.
Yes.
Yes. 5,000 divided by 10,000 into 673. You get 3367. This is 5,000 minus 3367. 1,633. Do the same for labor and overheads also. You and add subsequent cost. You'll get the total cost. Total cost, and then you'll get total cost of production. I hope it is clear.
Yes, sir.
Yes, sir.
Yes. So that is your joint product RTP. Okay. Next, come to your R2E now.
335.
335. Joint products and byproducts. Yes. So KP Limited produces and sells the following products. Units is given. Selling price at split off. Selling price after further processing is given. Cost of raw material is 89,75,000 and other manufacturing expense cost is 13.67 in the manufacturing process, which are absorbed on the products on the basis of their net realizable value. How do I find out the NRV? Selling price minus profit percentage, if any. Have they given the profit percentage? They have not. Then we'll do it in the form of a ratio. Nenpidya, Yes, when NRV method, when the profit percentage is not given, what do? I do selling price minus further processing cost. Whatever the cost, whatever the value we arrive at, that ratio I will use for apportioning the joint cost. Okay, now? Yes? Yes. The further
sir.
processing cost of A, B, C are 31.25, etc. Fixed cost is 11,82,500. You are required to prepare the following in respect of the coming year. Statement showing income forecast of the company, assuming that none of its products are to be further processed. Okay. Statement showing income forecast of the company, assuming that products A, B, C, and D are to be further processed. Okay. Apportionment of joint cost on the basis of net realizable value method. Yes. Sales value they have computed. Yes. Check here. Sales value units into selling price. Yes or no? If I'm doing NRV method, I will take selling price at split off or after further processing. I will take selling price at split off or after further processing. Which one will I take, guys? Tell me.
After further processing.
After further processing, correct? Yes or no? So 5 lakh units into 62.5. Can you guys see? 5
Yes,
lakh
sir.
units into 62.5. That is what is done here. 5 lakh into 62.5, that 3.12 crores. Same way you do for all. Then further processing cost is given here 31.25, 3.75, 1.25, 3.75. Same thing is written here. Okay. This 31.25, 3.75, 1.25. Yes. Now, product is here 3.75. Okay. After that, you get net realizable value. Yes, NRV. This ratio now you will use. That is 42937,500 and 281.25. Correct. So your joint cost is how much? Joint cost 89 lakh. Sorry. Joint cost is you have to calculate. You have to add it and calculate a step. They have done a working note here. Yes, total joint cost is here. See, raw material cost plus manufacturing expenses. 39 lakh, 89 lakh 75 plus 13 lakh 67,500, 103,425,500. Okay, here you can show the computation 103,425,500 divided by 429,37,500 into 281,25,000 will give you 67,74,563. Yes, you can show the working for one. Okay, working is what? 429,37,500 divided by 103,425,500 divided by 429,37,500 into 281,25,000. You should get 67,74,563. Yes, all of you, did you write the workings there?
Yes,
Corresponding to it, have you all of you written? Yes, all of you write down the working. Okay, are you guys getting 67,74,563? Yes or no?
Yes, sir.
Yes,
Yes.
try again. Do it again. 103,425,500 divided by 281,25,000 into 103,425,500 divided by 429,37,500 into 281,25,000. You should get 67,74,560. The same thing is done for all. Same thing is done for all. Clear?
Yes, sir.
Yes, sir.
And
Yes,
then
sir.
income forecast is done. And then income forecast, sales value is done. This is what, assuming that none of its products are further processed. So very simple. Sales value minus apportioned cost or joint cost and less fixed cost in the total, you'll get the profit. Clear?
Yes.
Yes.
Yes,
Sales
sir.
minus joint cost. Next, statement showing income forecast of the company, assuming that products A, B, C, and E are further processed. Yes, only A, B, C, and E, because D, it is not further processed. Correct?
Yes, sir.
D is not further processed. Check the question here. It is not further processed. There is no sale value here, and even the cost is not given for D here. It's only for A, B, C, and E. Okay. So the same thing now. After further processing, what? Sales value minus apportioned cost minus further processing further process costing, we'll get total processing cost, and then excess of sales revenue. Yes, then less fixed cost and then profit. Simple.
Yes, sir.
Yes, sir.
Yes. ASR Limited mainly produces product L and gets byproduct M. Okay. Out of a joint process. So there are only two. One is main product, one is byproduct. The net realizable value of the byproduct is used to reduce the joint production cost before the joint costs are allocated to the main product. Treatment of byproduct cost. Treatment of byproduct. Remember, yes, sale value of the byproduct will be reduced. Yes, will be reduced from the total joint cost. That's what they have written here. During the month of October 22, company incurred joint production cost of rupees 4 lakh. So joint cost is 4 lakh. The main byproduct L is non-marketable at split off. Thus, it has to be further processed. Details of the company's operation are as under. That means you use the NRV method here somewhere. Okay. So 10,000, 45, 1 lakh, 1,000. Profit earned from product L, you are required to find out. Okay. Selling price per kg of product L if the company wishes to earn a profit of rupees 1 lakh from the above production. So this is X profit. Sale value at X profit tarane. Similar. Okay. Calculation of profit on product L. Sales value is given. How? 45 into 10,000. Illi bracketed bariri. 45,000. 45 into 10,000. That is 4 lakh 50. Yes. Selling price per kg 45. Yes. In my 10,000 is the production units. So here it is 4 lakh 50,000. Okay. Less further processing cost is 1 lakh 1,000 given. Further processing cost is 1 lakh 1,000 given. So you get balance is 3 lakh 49,000. 3 lakh 49,000. From this, I have to minus the joint production cost, correct? So joint production cost is 4 lakh. 4 lakh. From that, I will minus. Remember the process account? Process account only. Sale of byproduct I have to minus. So sale of byproduct is how much? 200 into 5, correct?
Yes, sir.
So 200 into 5. So its joint production cost is 4 lakh minus 200 into 5, 3 lakh 99,000. So there's a loss of 50,000. There's a loss of 50,000. Did you all understand this?
Yes,
sir.
Yes, sir.
Harshita, clear?
Yes, sir.
Yes. So calculation of the desired selling price of product L. Very simple. Desired profit plus total cost by units measured. So 3 lakh 99,000 is the cost, joint product cost after minusing product L. Yes or no?
Yes, sir.
Yes. 1 lakh 1,000 is further processing cost.
Yes,
Yes, sir.
Profit I need is 1 lakh divided
Desired
by
profit
10,000. I get the desired selling price of 60 per kg. Is this clear?
Yes.
Yes,
Yes. Okay. Next, JP Limited uses for joint production process that produces three products at split off point. Joint production costs during the month of July 2022 were 33 lakh 60,000. That is the joint cost. Unit produce sale at split off is given. After further processing is given. Cost to process after split off, that is further processing cost is given. Sales price is given, further processing cost is given. Product C is a byproduct of, and the company accounts for the byproduct at net realizable value as a reduction of joint cost. So the NRV of that is, so you have to apportion the joint cost using NRV method, and then the cost of byproduct should be minus from the joint product cost. Clear? Whatever sale value that is. So we'll do it. Further, product B and C must be further processed. So must be processed further before they can be sold. Find out the joint cost allocated to product A in the month of July if the joint cost allocation is based on NRV. Okay, NRV method we use. So product B and C must be processed further before they can be sold. It means product A can be sold at split off. Yes or no? They've not given that for product A. So product A can be sold at split off. So now you need to choose whether I sell it at split off or after further processing.
Yes, sir.
Yes. See here now. Cost to process product A after split off point is 6 lakh. This is further processing cost. So
Yes, sir.
that is my incremental cost. Incremental revenue is what? 300 minus 200 into 3,000. 300
Yes,
minus 200 into 3,000. Can you check here? Yes. Yes. 300 minus 200 is 100 increase into 3,000. That is 3 lakh. Should I further process? Yes or no? Should I further
No.
process?
No.
No. Why? Because incremental revenue is less than the incremental cost. So I will not further process. Okay. Next. Sales value at split off for A is 6 lakh. We have already done. Yes. How? 200 into 3,000. 200 into 3,000 is sale value at split off for product A. Clear? 6 lakhs. Next. Since product B must be processed further, we use its net realizable value for the joint cost allocation. NRV of product B is how much? Here, check this. Product B, 350 is here. 6,000 is the sales value. Okay. right? And minus, so 350 into 6,000 minus 6 lakh is further processing cost given here. ಕಾಣಿಸ್ತಾ ಇದೆಯಾ? ಗೊತ್ತಾಗ್ತಾ ಇದೆಯಾ? See, here product A, am I further processing? Yes or no? Product A. Product A. I am not further processing.
No,
Correct.
sir.
Therefore, there is no concept of further processing cost now. I am only taking the sale value at split off. Did you understand? 200
Yes.
into 3,000. Clear?
Sir.
All of you? Yes?
Sir.
Yes.
Yes, sir.
Product B is further processed. So NRV, how will I find out? Sale value minus further processing cost. Yes or no?
Yes, sir.
Yes. So sale value is 350 into 6,000. Sorry, 350 into 6,000 minus 6 lakh. So that is 15 lakh.
lakh.
Clear? That is what I'm using here. Now joint cost allocation, total cost is 33 lakh 60. But from 33 lakh 60, I will minus the sale value of product B. Yes or no?
Yes, sir.
Yes. What is the sale value of product B? Because it's a byproduct. Correct? Sorry, product.
Product.
Sorry, product C. I'm so sorry.
C.
Product C. Yeah. Product C is a byproduct. So I have to minus the sale value of product C. Yes.
Sir. Yes,
Yes, sir.
So now come here. Check here. Yes.
NRV is.
NRV. Where is the NRV of product C?
Sir, the given sale value and further process.
No, but computation ಇರ್ಬೇಕಲ್ಲ ಇಲ್ಲಿ. They have not done, no? They have directly written, I think. Okay, you guys do use your pen. Alle note down ಮಾಡಿ. You have the printout, no? Write down
Yes.
NRV of C. Write down NRV of C. I don't think they've shown the computation or I'll miss ಆಗಿದೆ. NRV of C is sale value of C is 9,000 into 100, correct?
Yes,
9,000 into 100, 9 lakh. 9,000 into 100, 9 lakh. 9,000 into 100, 9 lakh. Minus further processing cost 6 lakhs. Minus further processing cost 6 lakhs, which is equal to rupees
3 lakh.
3 lakh.
3 lakh, correct? So that is the profit from the sale of byproduct C. So that NRV I will be reducing. See, it's given in the question only. Okay, what are they given? The company accounts for the byproduct at net realizable value as a reduction of joint cost. Okay, so therefore from the joint cost of 33 lakh 60, I will minus the NRV of product C because it's a byproduct. So now the joint cost to be apportioned between A and B is 30 lakh 60,000. Clear? 30 lakh 60,000. NRV is how much? 6 lakh and 15 lakh. A and B, the NRV, you know. Yes, 6 lakh and 15 lakh. 6 lakh plus 15 lakh is 21 lakh. Here, 21 lakh. You show the working there within bracket 6 lakh plus 15 lakh. So for A, it will be multiply into 6 lakh. You get 8 lakh 74 to 86. Clear, all of you?
Yes, sir.
Yes,
Yes,
sir.
sir.
Understanding?
Yes, sir.
Yes. Okay. Again, this is an easy problem. Output is given. So physical output method they would have used here. Correct. Weight of output. Physical output method they've used. Clear? Yes. Where is physical output? Output is how much? 100, 70 and 80. Yes. So 100, 70, 80. Other percentage they found out, given the weights, and then apportionment of joint cost is done. That is first question, I think. First sub question. So I told you, any decision you have to take whether to further process or not, always follow what? Incremental approach, incremental revenue minus further processing cost, incremental profit. So will you further process Y? Yes or no?
No, sir.
Will you further process Y?
No,
No, sir.
No, because it's a loss. So if you see, it is advisable to further process only products X and Z and to sell product Y at point of separation. Clear?
Yes, sir.
Yes,
Yes.
sir.
Treatment of byproduct, again and again it is asked. Okay, this question, theory question, again and again it is asked. I've given, it's there in your notes. I've dictated it. It's also a part of the R2E material. Read it. Okay.
Yes, sir.
Yeah, all this is Easy. So this is the toxic waste problem. Toxic waste or that waste problem. Okay, where abnormal loss is there, waste is there. You incur a cost to dispose. Disposed at a cost of 16.5. So same thing that if you solve the question that I've done in the class. Clear? All of you?
Yes, sir.
Yeah, it's a lengthy problem. I cannot discuss now. It's a lengthy problem, but doesn't mean it's not important. It is important. Discuss, solve it again. This contribution margin method problem. Okay. Contribution margin method problem and physical quantity. So direct material, direct labor, variable overheads and fixed overheads. So joint cost. This is what the joint processing cost during a particular month are. So first you find out what is the total joint cost. Total joint cost is 83,600. But you have to present it this way. Why? Tell me why first variable cost and then total joint cost. Anybody? Because contribution margin method is there. You need the split between variable and fixed. Are you understanding?
Yes,
Because
sir.
you have to find out contribution margin, you need the split between variable and fixed. So that is why first they rolled all the variable together, 30 plus 9,600 plus 12,000. You can check here, 51,600 plus fixed overhead, you get 83,600. Clear? Yes. Now that 83,600, they have used the physical output method. Physical output method, you know, 120 units and 100 units. So divided by 220 into 100, divided by 220 into 120. Okay. So total joint cost 83,600 divided by 220 into 100, you get the joint cost of product A. Yes, get the joint cost of product A. Same way you do for product B, share of joint cost. Okay, next. Variable cost, I told you, you can use a physical output method, yes or no?
Yes, sir.
Proportion. Variable cost. Variable cost total is 51,600. So 51,600 divided by 220 into 100, again you can do. Okay, you get variable cost for A and B. For fixed contribution margin method, I need to find out what is the contribution.
Yes, sir.
So
Yes, sir.
contribution is what? Sales minus variable cost.
Yes, sir.
Yes, sale. What is the sale for product A? Check here. 100, 600 per unit and 200 per unit. Yes or no? So sales is how much? 600 into 100 and here 600 into 100 and 200 into 120. Sales minus variable cost, which have arrived here, you will get the contribution margin. Since very important, contribution margin is negative for product B, the fixed cost will not be negative allocation, it will be zero. Entire fixed cost is allocated to product A. At that point, you should remember. Clear?
Yes, sir.
Yes, sir.
You can easily find out the profit under both the methods of physical units method and contribution margin method. Sales value minus apportioned cost, you'll get the profit or loss. I hope this is clear.
Yes, sir.
Sir.
Yes, sir.
Understand. Yeah, again, treatment of byproducts in costing, like I said, time and again, they keep asking. Okay, same thing. You have to write. Clear, all of you? Those two answers, I'm supposed to share it with you guys. Adu suggested answer, which I have it. Okay, that I will quickly share it off right now. Immediately after this class is over, I'll send it to CAPS office number. They'll send it in the group. Adu answer, remember. That incomplete answer, I had to say the suggested answer. So I have the suggested answers. I will share it with you guys. Okay.
Yes, sir.
Okay,
Yes,
sir.
sir.
Yes. That's it. We're done with your revision, full costing. So by now you should be full pakka, perfect. Yes. Madi, Odi. Yes. So today's what? Today's Thursday. So you have today whole day. Halwa. Whole day nahi de halwa. On
Yes,
whole day
sir.
you have. Tomorrow whole day you have. Saturday also. I think when is your test? Normal exam time
Sunday.
only, no?
Sunday.
Sunday.
Sunday, na?
Yes.
Saturday, alva. Saturday. It was scheduled on Saturday, no?
Was, sir, but now it's moved to Sunday.
Move to Sunday, na? Why in the preparation level notkonda?
No, sir. Sir. I mean, partly,
Huh?
Yes,
partly
sir.
yes, but he told costing portions complete then you cannot write the test and that. So apparently we can complete the portions by Saturday.
Saturday. And so Sunday afternoon you have the test.
Yeah.
Yes, sir.
Sunday afternoon, 2 o'clock, not 2 to 5. Okay. Birthing. Okay. I'll meet you all for the valuation there. Okay. All the best. But theory ignore ಮಾಡಬೇಡಿ. Theory I've told you minimum half a day at least spend ಮಾಡಿ. ದಯವಿಟ್ಟು. Okay. Minimum half a day at least to spend on theory. Don't forget. So Saturday complete it off, including the theory. So Saturday first half ತನಕ I'm telling the maximum ಅಷ್ಟಾದ್ರೂ minimum ಕೊಡಿ ಅಂತ ಅರ್ಥ ಆಯ್ತಾ? Half a day for theory, please give. Do not miss on theory because it's important. One entire question will come, and normally whoever your average students at least want to score 100 on 100, excellent, confident on scoring, want to solve all the problems within the time, it's your call. Okay, but for average students who are looking at as 60 plus, see average namdralli exemption ಅರ್ಥ ಆಗ್ತಾ ಇದೆ ನಿಮ್ಗೆ? Average is exemption, not below exemption. You have to get exemption, clear? I'm not talking about 90 plus, 95 plus. They were all intelligent, they plan for themselves, alva. So that you guys plan. But average students, you have to compulsorily write the theory because otherwise problem, it's difficult to complete the paper. That's what we have seen, average students trend. Okay. So I'll spend Madi half a day at least. So your target should be by Saturday, first half, at least you should complete the entire syllabus. So that second half, at least you can do the theory. Sunday, first half, revise Madi, and then write. Yes. Yes or no?
Yes, sir.
Yes, sir.
Should be your target. That should be your target. Okay. Sunday first half revise ಮಾಡಿ. So it will be like you are writing your main examination. ಇಲ್ಲಾಂದ್ರೆ ಏನಾಗುತ್ತೆ ಮತ್ತೆ ಅಯ್ಯೋ ಫುಲ್ ರಿವೈಸ್ ಮಾಡಕ್ಕಾಗಿಲ್ಲ, ಫಸ್ಟ್ ಡೇ ನೆನಪಾಗ್ತಾ ಇಲ್ಲ, ಏನಕ್ಕೆ? ರಿವೈಸ್ ಮಾಡಿ. Okay, if not half a day, at least 1-2-3 hours ಅದು ರಿವೈಸ್ ಮಾಡಿ ಫುಲ್. ಓಕೆನಾ? 2-3 hours ಅದು ರಿವೈಸ್ ಮಾಡ್ಕೊಂಡು ಬರಿ. Okay. Yes, someone raise the hand. I think we can stop the YouTube recording. Okay. Yes, thanks to YouTube viewers also.